Good morning, everyone. I'm John Podesta, the chair of the Center for American Progress. Welcome to today's event. For those of you who would like to utilize the closed captioning function, there's a closed caption button at the bottom of your screen, and you can get live captioning. I'm thrilled to be joined by Senator Chris Van Hollen for a discussion today. I'll introduce him in just a moment, and then after he's spoken, Mara Redmond, our executive Vice President for Policy, will moderate the conversation and take questions from our audience. But first, let me say a few words at the outset about today's topic. We're living in a moment when income inequality is reaching extraordinary levels. In the past few months, ProPublica came out with a report that revealed some of the richest Americans alive today have at times not paid a single penny in federal income taxes. The same report found that while the median American household earns roughly $70,000 per year and pays 14% in federal taxes, the top 25 richest Americans have paid a true tax rate on just 3.4% of their wealth growth between 2014 and 2018. And while those numbers might be astonishing and the lack of fairness staggering, it shouldn't come as a total surprise. For years, funding for the IRS has been in decline. In fact, it fell by 21% in the last decade. That's made it harder and harder for the American government to enforce its tax laws. And on top of that, the 2017 Trump tax cut was so overly weighted to be favorable to the wealthy that it only served to exacerbate the trend and, of course, increase the deficit. As a result of those tax cuts, in 2020, the average household in top 1% was estimated to receive a $50,000 tax cut, 77 times larger than the estimated average tax cut for the bottom 80% of Americans. Addressing tax fairness and by extension income inequality is long overdue. In addition to the simple question of fairness, there's a growing body of economic literature that has shown that the staggering inequality is also bad for economic growth. And that's not to mention that the American people are overwhelmingly supportive of raising taxes on corporations and the wealthy by a 2-to-1 margin, according to a recent poll by Reuters, and by a 3-to-1 margin by a recent poll by Morning Consult. Now, with Congress turning its attention to a reconciliation bill to build support for President's Build Back Better agenda, there is a golden opportunity to do the right thing and to do the popular thing. The revenue raised by making big corporations and the very wealthy pay their fair share can be used to make the needed investments to support families, bring down costs, rebuild the middle class, as well as ensure that we can take a robust stance against climate change and support jobs in the clean energy sector. In short, those investments will produce a stronger, fairer, more innovative and more robust economy paid for with a fair tax system. Now, Senator Van Hollen has been a huge advocate for making a fair tax system a reality. Just a few examples. He's proposed the STEP Act, which would eliminate a loophole that gives an unfair advantage to the wealthiest of heirs. He's proposed the millionaire surtax, which would add an additional 10% tax to incomes over $1 million for individuals and over $2 million for married couples. And he's proposed the Polluters Pay Climate Fund, which would require fossil fuel companies to pay a fee to help compensate for the losses and damages that the pollution they are producing costs the economy. As a former ranking member of the House Budget Committee and as a current member of the Senate Budget Committee, Senator Van Hollen has been a vocal leader on issues of fairness, equity, and sound fiscal policy. And I would say that the US Congress has fewer greater assets than Senator Chris Van Hollen when it comes to how fiscal policy can produce strong, equitable growth. So, Senator, thank you for taking the time to be here today. Thank you for all the work that you're doing in this vital area. And now I'd like to turn the floor over to you, and then we'll have a moderated discussion with Mara. Thank you.
Well, thank you, John. And let me start by thanking you for your leadership on these fundamental questions for our country and to CAP for being an engine of innovative policy ideas to build an economy that does work for every American. So it's great to join with you and with Mara Rudman and with CAP in this discussion today on this fundamental question, which, as you said, requires us to have a fair tax system, but one that also will ultimately generate more economic growth and a more inclusive economy. And if you ask Americans whether they're Republicans, Democrats, or independents, they agree with us that tax reform is badly needed. So this, of course, is all part of President Biden's Build Back Better agenda. We, of course, passed in the early months of the new Congress the American Rescue Plan to deploy more vaccines more quickly and more fairly, as well as provide an economic safety net as we continue to weather the storm and defeat the pandemic. That was trying to make sure that things didn't get a lot worse and that we put ourselves on some road to recovery. But the better part of the Build Back Better agenda is a recognition that simply returning to the pre-pandemic status quo is just not good enough. We had an economy where the very wealthy did very, very well and even better during the pandemic. Everybody else was either treading water or falling behind. And so that is why we're focused on the better part of the Build Back Better agenda. One piece of that, of course, is the bipartisan infrastructure bill, but a very big piece, an even bigger piece of the American Jobs Plan and the American Families Plan will be part of this budget process. And it was about 1 week ago in the early morning hours of last Wednesday that Senate Democrats passed that budget resolution, which, as you know, is the first step toward that much, implementing the much bigger part of the Build Back Better agenda. And I'm just going to tick off some of the highlights of that, but it will provide a great expansion in educational and job opportunities for every American. The universal early education piece is something that many of us have worked on for a long time. CAP has been a longtime advocate, as have I and many others. And it also continues to provide that opportunity through more support for workforce training, 2 years of free community college, more affordable college overall, really investing in our people. As we invest in our physical infrastructure on the bipartisan bill, we've got to invest in opportunities for more Americans, and that will boost job opportunities. We also want to reduce costs for families, everything from prescription drug costs, which we intend to tackle, to healthcare costs and the costs of premiums, to childcare costs, to housing. And those are major pieces of this legislation. And of course, we want to extend the middle class tax cut and tax cut for working families, the largest middle class tax cut ever, which will currently expire at the end of the year if we don't extend that into the future. And for folks on Medicare, there's been this big gap. People are not covered for dental, vision, hearing, and that's among the changes we want to make to strengthen the Medicare program. And also, as part of this whole thing, we really need to put millions of people to work in building that clean energy economy. We just heard again the Code Red report from the UN panel of experts. We can see the damage being done by the day, but also the opportunity to put more people to work. So that's the agenda. And we need to make sure that we cover the costs of that. And I should say that the revenue piece that we're going to go into some detail about here in the conversation is something that we should be doing even without the investments we have to make. I mean, it's important that they help pay for those important investments, but we desperately need tax reform for all the reasons John and I just highlighted at the beginning of the call. And there are a couple of things that I do want to highlight in that regard. And as we go through this process, there'll be a menu of options that the Democratic caucus looks at. And so our purpose today is not to have an exhaustive list or to be, identifying which ones are at the head of the pack, but just to give you a flavor for some of the important proposals that we think are out there that will make our tax system more equitable. So the president has proposed a number of things. I have, in addition, proposed a millionaire surtax. Don Beyer introduced this bill on the House side. Very straightforward, very simple, and very easy to implement. It just says if you make more than $1 million a year, $2 million for a couple, $1 million for an individual, you will pay a surtax of 10% on the income above $1 million. And that applies both to earned income as well as unearned income. And that second piece, of course, is very important because very high income individuals make a lot of their money off of money rather than off of their labor. And it's important that we have a tax system that doesn't treat folks who make money off of money more favorably than those who are, going out and working through sweat and labor every day. So that is an important feature of that proposal, that it applies to unearned income as well. And it's 0.2%. We're talking about 0.2% of American households that would be paying that amount. So it is also something that polls show is overwhelmingly popular, including among Republican voters. Second, we've got to deal with the issue of massive intergenerational transfers of wealth. This is something that billionaires and very wealthy families use to pass wealth on from one generation to the next without ever having any of it subject to taxes. Middle-class families are paying taxes on their income. This current loophole in our law is really what has given rise to the American aristocracy, where people can pass on those unearned wealth from one generation to the next. So, for example, if I buy $10,000 worth of stock, I hold it for a very long time. It appreciates to $1 million. When I die, I pass that on to my kids, and they benefit from what's called the stepped up in basis. So everything from the $10,000 where I originally bought the stock at to the $1 million, that gain, that very large gain, is not taxed because even if my heir sells it the next day, they sell it at that higher $1 million basis. That's not something that's available to most. Middle-class families are we have provisions of this bill that allow people to pass on wealth, gains up to $1 million. We're also going to make sure we deal with the family farms and small businesses, but this is a massive loophole for the super wealthy. Let me just turn quickly to a couple of other proposals before we launch our conversation. One on the corporate tax side, as you know, President Biden has proposed increasing the corporate tax rate back to 28% and having a 21% global minimum tax. That proposed and move to a country by country reporting. This is very important because the Trump 2017 tax code had what appeared to be sort of a minimum tax, but it actually created incentives for American corporations to move jobs and assets overseas in order to be able to benefit from a loophole, which continue to allow them to park money in tax havens like Bermuda. And we actually saw an increase in American corporate profits parked in Bermuda over the last 3 or 4, over the last 2 years. So this is another very important part of the tax reform proposal that we're looking at. In addition, of course, IRS enforcement. We know from the current IRS commissioner, who, as you know, is a Trump appointee, that by providing 70, $80 billion over 10 years to the IRS, we can dramatically increase enforcement. These are mostly high wealth individuals who are not paying their share of taxes that are already due and owing, and that can generate $700 billion over 10 years. Let me end with one of the other proposals that John mentioned that I've put out there, which is a polluter pays climate fund. This is very straightforward. The idea is that those who have contributed most to causing global climate change, those who have profited most from it, should help pay the cleanup. Taxpayers should not have to bear those costs alone when some of our biggest polluters like Exxon, Chevron, Shell, others are the ones that have spewed, greenhouse gases into our atmosphere. And our polluter pays climate fund would require approximately 25 to 30 corporations, those who polluted the most, to pay into a fund to help with the cleanup and help address climate change directly. So there are just some items on a menu, but we think that as we go forward, these are all things that will increase the equity of our tax system and will be very supported by the public and politically and publicly popular. So let me end there. Happy to dive into more details, and I'm looking forward to the conversation with Mara.
Thank you. Thank you very much, Senator, for your remarks and for engaging in this conversation. And hello to everyone. I'm Mara Rudman, the Executive Vice President for Policy at the Center for American Progress. Senator, you have been clear about how important it is that we address the inequities in our tax system, especially right now. And we're clearly on the precipice of major investment in this country, investment that could be transformative for American families and small businesses. And part of the equation for moving forward most effectively with this investment suggests paying for it, in part by making sure that large corporations and wealthy individuals pay their fair share of taxes. So I'm going to ask you one question to lead us off that starts from the last element that you mentioned, the polluters pay legislation. But before I do that, I just want to encourage folks to please add your questions to the Q&A on your screen, and we will aim to get to as many of your questions as we can. So please feel free to jump in on the Q&A there. Senator, you spoke about the polluters pay legislation. Clearly, too often corporations and their wealthy executives profit while everyone else shoulders the costs. And that, of course, includes the cost to our planet itself, which sadly, at this point, is quite literally on fire. Can you describe a little bit about how the polluters pay legislation tackles this challenge in the reconciliation context? And as a follow-on to that, could you also maybe describe a little bit about how the legislation targets help specifically to communities hit hardest by the actions of these polluters?
Yes, and let me just say, yesterday I was out in Annapolis, Maryland, which is the home of the Naval Academy, and I was there with the mayor of Annapolis to talk about an important project on the city dock there, because Annapolis is prone to huge flooding, and it's going to be getting worse. This most recent UN report indicated that we could experience sea level rise there by as much as 5 feet over time. So we were talking about a particular project, a $65 million project, and they're trying to come up with the funds to pay for it, to piece together the funding. And that's a clear example of a project that could benefit from funds from a polluter pays a climate fund. And what we do is we look at the data, and from the year 2000 to the year 2019, and we look at the biggest contributors to greenhouse gas pollution. And we start the threshold at those who are the biggest polluters and who have profited most. So that's those who are responsible for more than 0.05 of greenhouse gas emissions. And when you draw the line there, we're talking about 25 to 30 companies, primarily big oil. And we assess a fee, and the fee is designed to come up with a fund that would help pay for the costs of remediation, mitigation, but also to help pay for ways to avoid the accelerating climate change. And it's a $500 billion fund over 10 years. And it's designed such that those who polluted most pay the most, which I think makes a lot of sense to most Americans. We don't think the American taxpayer should have to foot the entire bill when these big polluters have been profiting for so long. And then the funds can be used in a variety of ways, and we outline some in our proposal. But we do make clear, Mara, that 40% of the funds need to be targeted to communities that have been historically hardest hit and which are most vulnerable as well from the growing impacts of climate change. And if you look in Maryland, again, I was in Annapolis and Anne Arundel County, many of the communities that would be hardest hit are lower income communities, communities of color. That's true in Maryland. It's true throughout the country. And so, we would use at least 40% of these funds to address climate change issues in those areas. But again, use the funds both to deal with mitigation, but also to help pay for the initiatives that we're putting in place to deploy a clean energy economy so that we can do our best to fight climate change going forward. So I do think that this has a real chance of gaining momentum going forward.
Thanks. And we have the questions rolling in, so I'm going to turn to them, Senator. From Jay Heflin, I'm going to combine, Jay, a few of your questions, if I can, into one here. Jay Heflin asks, what are the odds that a bill taxing unrealized capital gains, you spoke about in your remarks, Senator, could pass both chambers? And then as a couple follow-ons there. So from Jay, is there a problem if Congress approves a minimum tax for US-based international companies before the OECD acts? And Jay also wants to know about your polluter fund, how it's different from the super fund that is in the infrastructure bill. So any or all of the above.
All right, well, we have the super fund question, we have the minimum global tax question, and capital gains.
Exactly.
So let me start with capital gains. And as I think folks know, President Biden's plan does include an increase in the tax on capital gains. In fact, his proposal would essentially tax capital gains at the same rate as the earned income tax rate. And that, of course, is something that we'll be looking at. The president has also proposed the stepped up basis provision that I mentioned that I've been pursuing as well. And that is designed to get at this massive intergenerational transfer of wealth among the wealthiest families. I mean, I think people have seen the figures that, we used to look over at Europe as, sort of the old aristocracy, the kind of system where, you had the landed gentry and they were passing estates on from one generation to the next. And America was the land of opportunity, where everybody sort of had to make it on their own. Well, sadly, we see this massive transfer of wealth from one generation to the next without, and I just want to say, without ever contributing some of that massive gain to the common good. And that is the whole idea behind dealing with the stepped up basis. Now, we want to do it in a way that does not impact, family farmers and family-owned small businesses. We do have $1 million exemption on the gain, as well as a 5-year, payment system. And we're also looking for other ideas that people have. But I do hope that in this process, there will be some effort to address that issue. With respect to the global minimum tax, as you know, Secretary Yellen has made it a priority to try to negotiate a global minimum tax among the biggest world economies. She's made a lot of progress. I think it makes sense to move forward with the global minimum tax, but she recognizes, the administration recognizes, it's obviously best to do that when you at least have some coordination with respect to the other economies. I will say that there are ways, however, that for countries that don't participate, that the United States can also use our own tax system to apply leverage in that area. And, that is something that we're all exploring. And finally, thank you for raising the analogy of the Superfund with respect to the Polluter Pays Climate Fund, because it is patterned after that idea. And it is interesting that as part of the bipartisan infrastructure bill, Republicans and Democrats alike increased the Superfund fees. And those fees are applied, as you know, to the industry involved in hazardous waste, with a recognition that, those in that industry that are contributing to hazardous waste and the need to dispose of it safely should be paying into a fund, the Superfund. And if you think of what's happening to our climate now, it is turning into a greenhouse gas Superfund site. And we want to apply the same idea that that bipartisan group applied with respect to hazardous waste, the hazardous waste industry, to those who are contributing most to greenhouse gases and profiting the most. So that is exactly what the analogy is. It's a polluter pays fee. We did it for Superfund. We should do it to create a climate fund.
Thanks, Senator, and thanks, Jay, for getting in so many different key topics there. I want to come back, if I might, to the capital gains issue. We've got a question from Donald Sussman asking, what about Section 1031 exchanges? For our audience, Section 1031 provides an exception and allows folks to postpone paying tax on the gain if you reinvest the proceeds in similar property as part of a qualifying like-kind exchange. So, Senator, what about gains in 1031?
Yeah, I mean, this is an issue that I think, we are looking at closely. I do think we have to tread carefully. There are some, benefits to creating more dynamic, a dynamic economy in terms of immediate reinvestment in like properties. This is something, it's not one of the proposals I put forward on the 1031. I know that the Finance Committee will be looking at it closely to see what makes sense without doing any kind of unintended harm in this particular area.
Thanks. Mark Schaff, and apologies if I've mispronounced your name, Mark, asked Senator about what you estimate is the chances that the kinds of tax reform that you're advocating, and particularly he mentions the millionaire surtax and ending the stepped up basis. What do you estimate is the chances that will draw the support of all 50 Democrats at this point?
Well, look, this is, of course, that is the political math and the political calculus. We have to, get all 50 on board. And that is why we've put forward this menu of options. And it would be hard for me at this point to say which, have a higher chance of success than others. I will say that when the public is presented with a fair description of these proposals, they overwhelmingly support it. And so, for example, the millionaire surtax is one that is very clear. You don't have to take a lot of time to explain it, as sometimes you do stepped up basis. And it is overwhelmingly popular. The polling shows that, Republicans, Democrats, independents alike say that, if you're one of those 0.2% of households that are making $1 million a year per person, 2 million per couple, that, given all the challenges we face as a country, we should ask them to contribute more for the success of the country and for the success of more folks. I mean, as we've been talking about, as John laid out at the beginning, and I tried to underscore, we've had an economy where, the very well-to-do have done better and better over the years. Everybody else is flat or sinking. And we need to change that, both for reasons of equity, but also for reasons of, I think, faster economic growth across the board and a more inclusive economy. So that's the idea. Is these are proposals that I think on their own have merit as tax reform proposals, but of course also generate revenue that we can invest so that more Americans can have the chance of success that those at the very top enjoy.
Thanks. I have a couple questions for you on health-related costs. So Dan Ryan asked about whether there's a proposal to lower the eligibility age for Medicare, and if so, to what age? And we have someone else who's written in very concerned about the high costs of dental care, and someone who's retired but working to pay his dental costs, wanting to know what can happen with that, and with also dealing with the high cost of supplemental health insurance.
Okay, and I should quickly add to the previous question, IRS enforcement is something that I think also is going to enjoy widespread support in our caucus. I mean, after all, we're simply asking people to pay the taxes already due and owing, and the president's corporate tax proposals, I think, have widespread support. But I think when you take that whole mix of things, we're going to have strong support for a robust tax reform package. So with respect to the issue of Medicare, and both in terms of age and expansion, let me start with expansion. A big part of our proposal is to provide that coverage for vision services, dental services, hearing services. I think, many of us know, I certainly know from talking to my constituents, that is a major source of economic insecurity. There are lots of people who are on Medicare, who, they don't get the hearing help that they need, or dental or other, because it's not covered. And so we want to close that gap, and we do intend to close that gap. I've also supported reducing the age that people are eligible for Medicare down to 55. But there's a lot of running room between 55 and 65, and we'll be looking at that as well very closely. And I'm sorry if was there another piece to that?
I think you've covered it. Thanks. Mm-hmm. Thanks. Let me go back to what is perhaps a broader question. Given how much is on the table right now, closing tax loopholes available to big corporations that small businesses can't access, putting in place international standards. If you talked about, some multinational corporations can't race to the bottom, the millionaire surtax that you've discussed. Can you describe to us, Senator, to what extent do these policies encourage economic growth in your mind, or is fairness the goal in and of itself?
Well, I think it's all of the above. I think there are three, we achieved three goals with this. One is that it is a fair tax code, as John mentioned, and we saw in some of the recently released information. We have some of the very richest people in the country paying zero income taxes. That's also, as we know, the case of some of our biggest corporations in certain years. Given the complicated nature of that tax code, and that's compounded, of course, by multinational corporations being able to park profits in places like Bermuda, the Cayman Islands, other tax havens, and that is continued. In fact, in some places accelerated after the 2017 Trump tax giveaway to big corporations, which, as we know, was used in many places for stock dividends rather than more investment in wages and equipment. In terms of the, it is a fairness question, but I also think, and as John mentioned, there's a good body of economic scholarship and data that shows that, as a more inclusive economy is one that can also produce greater, economic growth, both make the pie fairer and make it bigger faster. And then finally, these do generate income that can be invested in trying to expand opportunity for more Americans and to close that income gap and to help close that yawning wealth gap. I should say, on the issue of economic growth, though, you can have an economy that grows very rapidly but leaves most people behind. And so I do think we should develop these alternative measures of what it means to have a successful economy. I often use the analogy, and this is one. If Bill Gates, crashed this Zoom call with us, all of us would be on average multi-millionaires, right? Our GDP in this little community right here would go through the roof, but that doesn't mean that any of us are actually any better off. It just means that we had, one person join the call who raised the GDP of our community here. So I think it's really important, as we measure the success of our economy, that we don't just look at aggregate GDP issues. We have to look at how folks in the middle are doing, and how folks who are trying and struggling to reach the middle are doing, and what kind of opportunities we're providing to them.
Thanks, Senator. Let me, if I might, zero in specifically on the fairness question with respect to income inequality, tax inequality. CAP, along with many others, has analyzed the racial wealth gap extensively. And for example, last year, we know that roughly 47% of unemployed white households could not come up with $400 in an emergency, while 65% of unemployed Black households lack such access. How do you see the potential revenue provisions and the broader Build Back Better agenda impacting that gap?
So this will impact that gap. I mean, that is the goal. I mean, the goal ultimately is to create a robust economy that's more inclusive and with more shared prosperity. And it does it in a number of ways. First is called the opportunity agenda piece, right? Which is beginning with the earliest education and, making that universal, making sure that every child can have that good start. And the childcare provisions are both important for early childhood education, but also to provide, working households with more opportunities. We've seen, especially during this pandemic, the challenges of childcare. It has become more acute than ever. And if, a family wants to be earning more income, they need to know that their kids are in a safe and secure place. And that means more affordable childcare, right? If a huge amount of your income has to go out the door for childcare, it changes your calculus, obviously. So that's just one example. We're going to reduce the costs of prescription drugs. That means that every dollar in your pocket travels further because your costs are less. And then there's the job opportunity expansion with respect to, the clean energy agenda, and, a lot of focus, we hope, on good paying jobs. So everything from early education to more workforce training to expansion of good paying jobs, whether it's in the, more traditional infrastructure or the clean infrastructure, to reducing the costs that are squeezing people's wallet. Now, on the wealth side, as you know, in the United States, for most families, that wealth is in their home. And we are working through the housing parts of this Build Back Better agenda to expand the supply of affordable housing and provide more opportunities for people to, own their home. One thing that, Mark Warner and I and others are looking at is more down payment help for first-time home buyers, which includes disproportionately, people from communities of color, but would help all first-time home buyers, generation home buyers. So I think that we are looking at a number of things that will both, reduce the costs of everything from housing to healthcare to childcare to community college as we invest more. So the idea is a greater opportunity for people to get good jobs, make more, and save more, and also hopefully save in areas that can help them build more longer-term wealth.
Thanks, Senator. I'm going to try to slide in one last question here. I know we're very close to our time limit here, but this is from Larry Ottinger, who thanks I echo for your leadership, including on this sound fiscal policy and equitable growth. What Larry wants to know is, what can we as active citizens and informed advocates do to help you in advancing the proposals for fair taxes that you're sponsoring?
Well, thank you, Larry, for the question and for your work in this area. There's been a lot of focus, and appropriately so, on the parts of the Build Back Better agenda that will improve the standard of living for Americans, and that is the heart of the agenda. But it is also really important to look at the tax reform pieces, which are, our mechanisms for helping to pay for it, because the American people and the public also support these proposals that we've been talking about. And as we head into the next couple of weeks, when that political math is going to, become essential, it's whatever you can do to amplify, those voices and to make it clear that these are proposals that have, strong support with the public, and to encourage, folks from across the country to call their senators and House members and let them know that they support the idea of these changes to help, build a more inclusive economy. Again, the goal, the very overriding goal here is to, create more opportunity, higher incomes, greater wealth in a much more inclusive way. And it is a good point to make that another plug again for the extension of the tax cuts for families with children, the child tax credits, which, as you know, are resulting in between $250 and $300 a month per child for families from middle class families and lower income families, and that's just one more example of providing in the form of a tax cut additional income that can help raise the standard of living for American families, allow them to do more for their kids and invest in their success.
Thanks very much. We, Senator, so appreciate your time, your thoughtfulness, your leadership here. We are at time or beyond time, though. I know that if we had it, we would continue the conversation beyond, because our audience is clearly eager and engaged, and we thank you in the audience. We've appreciated your participation as well. Senator, again, so appreciate your remarks and the robust conversation here and your leadership on these issues. We at CAP value tremendously all the work that you've done to establish a tax system that is fair and just, and please continue to count us in. All of us, I think that speaks to the audience as well, to do whatever we can to help in that fight. Thank you.
Well, Mara, thank you, and thank John, thank Cap, thank everyone for tuning in. I want to thank Harry Stein on my team, who's a great point person for me on a lot of the budget and tax issues. But this goes to the heart of what we've got to accomplish as part of the Build Back Better agenda. So thank you all.
Appreciate it. Bye, everyone.